Over the past 22 years at Select Property, we've helped arrange thousands of property purchases for international investors. And we've noticed something significant happening over the past few years. More and more expats, particularly UK expats who have moved to the Middle East and Asia, are choosing UK property over their new local markets. Now, I've been working in UK property personally for over 2 decades, so I've got some insight into why this is happening. And in this video, I'll walk you through the 5 reasons expats are choosing the UK over their resident property markets, and why this isn't just a trend, and how you can invest from overseas safely. Because expats have previously lived in the UK, they are already familiar with the legal frameworks and market structure. This sense of stability and understanding makes the process feel more straightforward and accessible. As a result, expats continue to drive significant investment into UK property, drawn by a market that is widely regarded as one of the most transparent, accessible, and secure in the world for international buyers. While other markets might offer more dramatic spikes in returns and value, often followed by steep drops, they also can come with hidden risks like weak legal protections, volatile currencies, or oversaturated markets that can't sustain growth. So, while some people let these misconceptions hold them back from investing in the UK, savvy expats who understand the real benefits are already buying up the market. And there are 5 clear reasons why. The first reason is the UK's well established property market. Some investors chase places with flashy developments and promises of explosive growth. They assume that newer means better, or that emerging markets automatically offer better returns. The UK property market is one of the oldest and most established in the world. It's not just about history for the sake of it. It's about consistent, proven growth over decades, with house prices rising over 120% in the UK over the past 25 years alone. To try and keep up with demand, over 200,000 new homes are being built in the UK every year. Unlike markets that experience sudden spikes followed by steep drops, the UK offers reliability, which encourages safety for your investment. Properties here have weathered economic downturns, global recessions, and political shifts, and they've not only held value, but they've actually grown. My advice is to look for markets with a proven history, not just exciting projections. As many expats know, when you invest in the UK, you're backing a market that's been tested for generations, and that's worth more than any short-term hype. Now, some investors overlook currency stability when choosing where to invest. They focus solely on property prices without considering what happens when exchange rates shift or when a currency loses strength. The British pound sterling is one of the most traded and consistent strong currencies in the market, and this matters more than you might think. Viewed as a stable currency globally, the British pound has experienced periods of both strengthening and softening against other global currencies such as the US dollar and the euro. For expats, especially those living in regions with fluctuating currencies, the exchange rate can also work in your favour when timed right. You're not just buying property, you're buying into a financial system that's been stable for centuries. Always consider currency strength when investing overseas. A strong, stable currency like the Great British Pound adds an extra layer of security to your investment and gives you a foothold in a stable market you're familiar with. I've spent years analysing overseas investor mistakes, and almost all of them come down to missing the basics. That's why we've put together a property investor checklist that walks you through exactly what you need to get started, step by step, without guesswork. If you're considering UK property, you can use this checklist through the link below. Some people think of property purely as a short-term investment, something you might flip and profit for or hold for a few years. They don't think about what happens decades down the line or how it can benefit future generations. UK property offers something truly unique. It's a legacy asset. This is an investment you can transfer to your children, your grandchildren, and beyond. It's not just about making money today, it's about building generational wealth. And if you've still got family in the UK, this makes UK property all the more appealing for expats. More than 78% of investors plan to keep their property for over 5 years, indicating trust in the UK market stability. And this stability is backed by industry leaders, with the UK house prices predicted by JLL to increase by a staggering 19.9% by 2030, rising to 24.6% in markets like Manchester. Because the UK market has historically proven it can withstand the test of time, you're not just buying a property, you're creating an asset that can provide stability and security and income for your family for decades to come. think beyond the immediate returns. Ask yourself, will this asset still hold value in 20, 30, or 50 years? With UK property, the answer is often yes. Now, let's talk about the legal aspects. Investors often underestimate how important legal protection is. They assume all property markets operate with the same level of transparency and security, which simply isn't true. From ensuring clear property titles and ownership structures to proper anti money laundering laws, and through legal checks, the UK's diligent legal system instills confidence in investors. Your property rights are protected under UK law, and the legal framework is very transparent. This means that when you buy property in the UK, you actually own it. There's no ambiguity, no hidden clauses, and no risk of the rules about ownership suddenly changing. Compare this to markets where foreign ownership is restricted or in its infancy, or property rights are unclear. The UK market almost always comes out on top. My advice is to always invest in markets with strong legal protections. In the UK, your investment is safeguarded by one of the most reliable legal systems in the world, and that peace of mind is priceless. Finally, let's discuss funding your investment. Expats can sometimes think lending options are far more restrictive now they're based overseas, but actually, working with a great broker allows access to leverage based on your circumstances, meaning expats can often obtain a mortgage, and a buy-to-let mortgage at that. This is a game changer because it means you don't need hundreds of thousands of pounds to get started. With the right mortgage partner, you can leverage your investment and get into the UK market with far less capital than you'd need in other countries. In many international markets, it's rare to purchase property with just a 25 or 40% deposit. In the UK, that's standard. This accessibility means you can diversify your portfolio, invest in multiple properties, or simply preserve your capital for other opportunities. Now, it's one thing to understand why investors are choosing the UK, but it's another thing to make the right move at the right time. If you want personalised guidance based on your individual goals, your capital, and your timeline, the next step is to speak with an expert. Book a call using the link below to speak to my team. And if you're considering if property is the right route for your capital compared to other assets such as stocks, watch this next video where we'll break down which one will actually make you richer in 2026.